Telangana College. I am going to handle you now GST filing. So the first unit will be the GST introduction. Now we'll come to know what is the GST. It's a goods and services taxes. So what do you mean by goods and services taxes? So first of all, what do you mean by goods? It is a kind of product that you are going to give you the customers, and that is going to increase the development of the economy. So how it is going to increase the development of the economy? Yes, here we have the introduction of the GST. And this concept was introduced in the year 2000 by the Atal Bihari Vajpayee led government, and however it was under the leadership of the Prime Minister Narendra Modi and Finance Minister Arun Jaitley that was the GST was successfully implemented on 1st of July 2017, marking a significant milestone in India's tax economy from next year. What do you mean by the history of the evolution of the GST? Here, the idea of a value-added tax was first introduced in France in 1954, and it was adopted by other European countries in the following years. In India, the idea of a GST was first proposed in the year 2000 and by the Prime Minister Atal Bihari Vajpayee. However, it took more than a decade for the proposal to become a reality. And GST, or the goods and services taxes, is an indirect tax. Now we have the two differentiation between the tax. The first one is direct tax. For example, for the direct tax we can take as income tax, and here we are going to see the indirect tax, where the customer is not going to pay the tax directly. They are going to pay the tax indirectly in the form of buying some goods or services or rendering some services to the other people. And here, tax imposed on the supply of goods and services, it is a multi-stage destination oriented tax that is going to be imposed on every value addition, replacing multiple indirect taxes including VAT, that is value added tax, excise duty and service tax. These are the examples of the GST. And who introduced GST first? So detailed solution here, the goods and services, the GST, the value added tax levied on most goods and services sold for the domestic consumption. So what do you mean by domestic consumption? Where we are going to use every day. So every consumption, that consumption is known as the domestic consumption. So where we are going to buy some products or goods and services that for our day-to-day consumption, that is known as the domestic consumption. So here the goods and services is going to be imposed on the value added, that is going to be the addition of the customs. So here the goods and services sold for the domestic consumption, here we are going to place the GST. There where the government is going to raise the economy by getting the GST from the consumers. Whomsoever it is they are going to consume, they are going to gain the GST, that is tax. So France was the first nation to implement the GST in the year 1954. So what are the benefits of the GST implementation? How the government is going to be benefited, how the consumer is going to be benefited. So the introduction of the GST in India has brought about several significant benefits. The first one is unified market, where the single market is nothing but every single market in the economy is going to gain the GST, that is tax. From that tax, that is going to be again utilized to the consumers. So here GST has unified India into a single market, making it more attractive for foreign investment by eliminating various state taxes. So here many of the consumers will not be getting the goods that they wanted, they need in that particular place. But here the GST plays a very important role in India, where the people can come and give the goods to the consumers who are there in the India. So they are going to consume the goods with a very effective manner and through this goods and services taxes. And less tax burden, where the tax burden plays a very important role. Here the tax on the tax effect will be reduced with the help of the lowering cost of the economy for the businesses as well as the consumers. Standardized regulations. With GST, tax laws, rates and the procedures are now consistent across all the states, simplifying businesses operations nationwide. Here the tax rate is going to give you a special regulation, where the tax rate is going to be very regulated, and it is going to give you the rates where we are going to pay the tax. Here we are not going to directly pay, we are going to indirectly pay through the consumers. Economic growth, as I told you earlier, economy is going to be very growth where the consumers is going to pay the GST, that is goods and services taxes. So the new tax regime is expected to boost manufacturing and exports, creating more jobs and contributing to the economy. So where the GST, that is the very big platform that is going to give you the opportunities of the job too, where the economy is going to grow. Competitive pricing. What do you mean by competitive? So we are playing a very important role in our day-to-day life. So every people in this organization or in wherever we are going to play a very important role where the competition takes place a very important role. Indian products can now compete more efficiency in international markets due to the streamlined tax structure. So here the maximum tax rate is going to be 30%. So every tax rate that we are going to have, the minimum one is 9%. That is CGST, SGST. So 9%, 9%, it is going to be 18%. We will be seeing in depth in the future. So improved investment climate. So the overall environment for investment in India is going to be likely become more favorable thanks to GST. Yes, here the investment opportunity is also there for the government where they are going to receive the GST. Reduced tax evasion. The uniformity of the SGST, IGST rates make it harder for the tax evasion, leading to more revenue. Here they are not going to gain any tax evasion. They are not going to evade anything. They are not going to spoil the particular market. Lower business cost. Companies are likely to see reduced cost, which can lead to increased consumption and higher production. Yes, with the help of the GST, there are more production and more rate of interest that they are going to receive from the government. Simplified tax system. GST offers a simpler taxation process with fewer exemptions, making compliance easier. Here, the compliance is going to be very easy, where the GST is going to be a simplest and simplified tax system. Digital and simplified procedures. So process of the registration, the tax payments and the returns, refunds under the GST are automated and simplified, accessible through the GSTN portal. So now everything is going to be online. We are not going to go in depth or in turn. We are not going to go directly to pay the GSTs. So it is going to be online. The portal is available and we can pay the GST through the online itself. Transparent input tax rate. So tax credit. The process for claiming input tax credit is more transparent and accurate, reducing the chances of errors and fraud. Here they are not going to fraud anything. Why? Because everything is going to be calculated by the government and you are going to pay the tax individually. That is going to be the customer. They are going to give it to the shopkeepers and they are going to gain the particular thing and they are going to pay. So it is going to be indirectly imposed on the consumers. So lower product prices. The efficient input tax credit system under GST ensures lower final product pricing for the consumer. So here the GST, it is going to be imposed from the foreign country, the other people is going to give you the goods and services. This GST will play a very important role. Why? Because the lower final cost here plays a very important role. Why? Because they are not going to dump you the goods, they are going to give you the whatever need in the particular market. So here the dumping process will be cancelled. That is why the GST plays a very important role, where the lower final product price is also there. Support for small retailers. Small scale retailers might be exempt from GST or benefit from lower rates, making essential more affordable for the consumers. So here the small scale industries plays a very important role again. Why? Because they are exempted from the GST and they are giving the goods and services to the consumer whomsoever need in an affordable rate. And overall GST is designed to make doing business in India simpler and more transparent, benefiting the economy, businesses and consumers alike. So here the economy, businesses and consumer. This is the cycle of the environment and this is the cycle of the every world. So where the economy grows only when the business grows. Only when the business grows with the help of the consumers. So here they place the economy with the help of the businesses and the consumers. So this will be the history. So Vishwanath started India's indirect tax regime in the year 1986. It forward to 2000 and which is going to started after the 2000 Vajpayee government formed a task to force proposed the recommended tax reforms, and it is going to forward it to the 2006 and 8 the election commission were finalized the GST structure, and 2010 government launched the computerized commercial taxes project and postponed the GST, and in the 2011 the head of the GST committee Azim Dasgupta resigned, and 12, 13 and 14, 15 to the 16 and lastly finally 17 GST got live on the historical midnight 13th of June and July 1st 2019. So the law will replace various indirect taxes with one simple tax, creating a boundary less and unified national market that will also lead to increase the country's GDP. Implementation of GDP would bring many professional opportunities and employment in terms of the compliance, advisory, tax planning, etc. Here, in terms of the compliance, where the GST is going to be compiled, and the advisory, the GST advisory is going to give you the tax planning of the industry. So where the GST plays a very important role. So GST, a game change for the Indian economy, where here now, what becomes costlier and cheaper? Here, the printing, writing or drawing link, it is going to be 12%, from it is now 18%. Knives, pencil, sharpener, blades, spoons, forks, etc. It is going to be now, the previous it is 12% and now it is 18%. Machines for cleaning, sorting, seeds, grains, pulses, atta chakki, etc. It is going to be, previous it is going to 5% and now it is 18%. Leads, LED lamps, lights and fixture, their circuit boards, the previous it was 12% and now it was 18%. The prepared finished leather champions and leathers, composition leathers, it is going to previous it is 5% and now it is 12%. Pre-packed curd, lassi and buttermilk is 0% and now it is 5%. Transport of goods, that is 18% by the passengers by reopens ropeways, that is going to 5%. Renting of truck inclusive of fuel cost, that is 18%, now it is 12%. Astronomy and orthopedic appliances, it was previous 12% and now it is 5%. So how will GST shape retail industry? The first, impact of the GST on the retail. First is reduced taxes and second is increased growth of retail market and increased supply chain efficiency, taxes on gifts and promotional items, seamless input tax credit. So this was the impact on the GST that is going to be on the retail. So boost your career doing GST certificate courses by the government. So it is going to be offered by the IIM skills. So this was the government website. If you want, you can scan this and you can utilize the courses. Which course is best for GST officers? Following online certificate courses in taxation can help the students to learn the details and complexities involved in the different taxation systems. So online BCom Masters of Taxation MSc and GST Practitioner Certificate course certificate in GST, that is Goods and Services Tax, KLIC Advanced Tally Pro with GST. So now we'll move on to the unit 2. So tax rates under GST. Types of GST in India. Unlike pre-GST regime, when there were multiple taxes such as central excise, service tax, state VAT, but that is value added tax, etc. The GST law introduced just one tax with 4 components. First one, CGST, that is Central Goods and Service Tax, SGST, State Goods and Service Tax, and UTGST, Union Territory Goods and Service Tax, and IGST, Integrated Goods and Service Tax. When the supply of the goods or service happens within a state or the union territory, also called intra-state transaction, then both the CGST and the SGST, UTGST will be collected. Whereas the supply of the goods or services happen between the state, also called as interstate transaction, then only IGST will be collected. The use of correct GSTIN becomes important to identify the applicability of the tax components. Hence, validate with the help of the GST search, that is tool, before using the GST number in the sales invoice. So where every people who is going to own the business, they need to have the GSTIN number. So from the GSTIN number, from the sales invoice, we can easily go through the GST details of the particular company or the organization or the shop. It is to be noted that the GST is destination based tax which is received by a state in which the goods are consumed, but not only in the state in which such goods are manufactured. What is tax rate of CGST and SGST? So CGST is going to have the two ways, that is intrastate movement and interstate movement. So first intrastate movement we have CGST and SGST, and interstate movement, that is integrated goods and services tax, that is IGST. The 9% is CGST and SGST, it is also 9%. And totally it is going to be 18%. The full form of IGST is Integrated Goods and Service Tax. Under CGST, IGST is a tax levied on the interstate supply of goods and on the services or across 2 or more states, union territories. So further IGST levy and collection will be governed by the IGST Act 2017 as amended from the time to time. IGST will be applicable on any supply of goods or services in both cases of import into India and export from India. Under IGST, exports would be zero rated, tax will be a share between the central and state governments. Example for the IGST with calculation, consider that a businessman, Ms. Rajesh Limited from Chhattisgarh in India had sold goods to Anand Limited from Dadra and Nagar Haveli and Daman and Diu in India, worth rupees 1 lakh. The GST rate is 18%, referring particularly to that 18% IGST. In such case, the dealer has to charge rupees 18,000 as IGST. This IGST will go to the center, later split between the center and Dadra and Nagar Haveli and Daman and Diu, if this is ultimate consuming state. Here we have the invoice where the total amount of the price of the particular goods sold is 1 lakh, and GST, that is IGST, is going to be 18,000, that is the amount that they are going to share. The total value, the total amount of the particular goods will be 1,18,000. So SGST, so we all know about the full form of the SGST, that is State Goods and Service Tax. Under SGST, an equivalent amount of the SGST is a tax levied on the intrastate supplies of the both goods and services by the particular state government where the product sold is consumed. So here is the example for the CGST and SGST with the calculation. So say Mr. Rajesh is going to deal in the Chhattisgarh, who sold the goods to Vijay Limited in Chhattisgarh worth rupees 10,000. The GST rate is 18%, comprising of the CGST and the SGST. In such case, the dealer collects a total of 1,800 and deposits over the GST portal, out of which 900 will be the apportioned to the central government and the balance 900 will be go to the Chhattisgarh government. So this is the invoice of the particular Rajesh Limited, which is going to sold to the Vijay Limited. So total amount is 10,000. So from that 10,000, the total of CGST 9% and SGST 9% is going to be 900. So total of the invoice will be 11,800. So UTGST. So we all know about the UTGST full form, which is Union Territory Goods and Services Tax, similar to how SGST is levied by the state government on the intrastate supply of the goods and service. UTGST is levied by the handful of Union Territory governments. So it refers to the tax levied on the intra-Union Territory supply of goods and services. It is governed by the UTGST Act 2017 as amended from time to time, and it is levied on together with the CGST. UTGST is similar to SGST and it is levied in the Union Territories which do not have their own legislature. So UTGST is applicable to the supplies that take place in the Union Territories and of Ladakh, Andaman and Nicobar, Iceland, and Chhattisgarh, Dadra and Nagar Haveli, and Daman Diu, and Lakshadweep. So please note that the Union Territories of Delhi, Jammu and Kashmir and Puducherry will fall under SGST law as they have their own legislature. So why there is split into SGST, CGST and IGST? So India is federal country where both the central and state have been assigned the powers to levy and collect taxes by our constitution. Both governments have distinct responsibilities to perform, for which they need to raise tax revenue. in the reform of GST. The center and states are still simultaneously levying GST. The three type of tax structure is implemented to help the taxpayer that take the credit against each other. So thus ensuring one nation and one tax, that they have split it into many parts, that is 4 parts. So now we are going to compare. So the first, Maharashtra, if the goods is going to sold to the A person to the B person, the Maharashtra, that is intrastate. So the CGST is going to be 9% and XGST to the 9%. Same the Maharashtrian will take place. And here, from Maharashtra to the Rajasthan, goods is going to be sold, that is interstate. Here the IGST plays a very important role, where there is a IGST percentage of 3,150. In this interstate, from Rajasthan to Rajasthan, it is intrastate. Again, the goods is going to be 30,000. So SGST it is 2,700 and CGST it is 2,700. That is going to be gained by the Rajasthani government. Here we can see the difference between the CGST, SGST and IGST. Meaning, CGST means the central government and central goods and service tax to replace the existing tax like service tax, excise duties, etc. It is going to be levied by the central government. So SGST means state government and services replace the existing tax like sales tax, luxury tax, entry tax and etc. And it is going to be levied by the state government. So IGST we all know it is the integrated goods and service tax combined with the CGST and IGST, and it is levied by the central government. So collection of tax will be here with the central government, state government and central government. So applicability, this is for intrastate supply and SGST is also intrastate supply, IGST is for the interstate supply. So here the registration, no registration till the turnover crosses 20 lakh, 10 lakh for northeastern states. SGST, no registration till the turnover crosses 20 lakh, 10 lakh for northeastern states. Here the IGST registration is very mandatory. Composition. So the dealer can use the benefit up to 75 lakhs under the composition scheme. The dealer can use the benefit up to the 75 lakh under the composition scheme. Here the IGST composition scheme is not applicable in intrastate supply. What is the slab rate? Here the income tax slabs under the new tax regime are as follows. So 0 to 3 lakh it is 0%, 3 lakh to 7 lakh it is 5%, 7 lakh 1000 and 10 lakh it is 10%, 10 lakh to 12 lakh it is 15%, 12 lakh to 15 lakh it is 20%, 15 lakh and above it is 30%, which is the maximum rate of the GST. So GST amount is equal to selling price into GST rate divided by 100. So here the selling price is determined by the adding the cost price and profit amount. The calculator factors in the selling price representing the total value of the goods or services subject to GST and the GST rate, which fluctuates based on the nature of the goods and services. Procedure for registration under the staff. So what is the procedure of registration of the GST? So step by step registration process in the online is being projected here. So first step is going to be go to the GST portal. So in the online we are available with the GST portal, and second step is generate a TRN by completing the OTP validation, and step 3 OTP verification and TRN generation, step 4 TRN generated, and step 5 will be the login with the TRN, and step 6 submit business information, step 7 submit promoter information. So what is the procedure for GST refund? So application for the refund is required to be filed in the form of GST RFD1. So by the supplier on the common portal and should be submitted with a declaration by a registration person and certificate by CA or CMA to the effect that is incidence of tax, interest or any other amount claimed as the refund has not been passed on the any. What is the procedure for payment of tax under GST? So visit the GST portal, navigate to the service payment and create challan. Select the monthly payment for quarterly return as the reason for the generating the challan. If the taxpayer is the QRMP scheme, however, if the taxpayer is not in the QRMP scheme, one can select any other payment to the create of the challan. So online income tax refund claim. A taxpayer can claim the refund within the assessment year that he or she has filed their IT returns. In accordance with the IT Income Tax Act 1961, taxpayer will have to be filed their return within the 31st July of any assessment year to claim the refund. So here the 31st of July of every year is the deadline for the GST refund claim. What is the procedure to get the refund? So refund resulting from the income tax return can be claimed by filing a separate application in IRS. So to check the status of your application, please visit your relevant regional tax office. So here the RTO regional office, we can go and file against the claim so that we can get the refund. How to do a GST refund? Apply for the GST refund using ETRS self-help kiosks at Changi Airport departure check-in hall before departure immigration and departure transit lodge and the selected airport migration and checkpoints authority ICAA. So the following are the different types of the refunds under the GST regime of excess balance in electronic cash ledger. So refund of the accumulated ITC on the amount of the exports of goods and services without the payment of the tax. So now the refund on account of supplies to SEZ, so that is Special Economic Zone, unit or developer without payment of tax. So what are the main features of the GST payment process? So the GST payment process is simplified through the online method including internet banking, debit card, NEFT, RTGS, maintaining electronic ledgers, liability, credit and cash is crucial for the accurate tax rate regime management and utilization of the input tax credit. So here there are the different modes that we can easily use for the GST return and filing. So what is the time limit for the GST refund? So is there any time limit for the sanctioning of refund? Yes. So refund has to be sanctioned within the 60 days from the date of the receipt of the application. So complete in all the respects. So the deadline is going to be 60 days for the refund claim. So what is the full form of the ITC? That is input tax credit in the GST under the goods and services tax. This allows the businesses to reduce the tax liability by claiming the credit for the GST paid on the purchase. So through this only we can gain the GST returns as the refund. So what is the formula for the GST refund? So maximum refund amount is equal to turnover or inverted rated supply of the goods and services into net ITC, which is input tax credit, adjusted total turnover minus tax payable on such inverted rated supply of goods and services, which is into net ITC divided by ITC availed on inputs and input services. So this will be the formula for GST refund. So which bank is best for the GST registration? So ICICI Bank is an authorized bank for collection of GST. So GST is a consumption based tax. Pay GST through your ICICI Bank account through any of the below payment modes, corporate internet banking, that is CIB. So companies with an yearly turnover of more than rupees 40 lakh for goods and for rupees 20 lakh for the services are required to the registration for the GST and pay taxes on their taxable goods and services. So GST registration threshold. So activity which is sale of goods. So state type will be normal category states, special category states. And threshold limits will be 40 lakhs for the sale of goods and 20 lakhs for the special categories. And here providing services, for the providing services for the normal category it is going to be 20 lakh, which is going to be exceeds of the 20 lakh, and here special category states will be more than 10 lakhs. So list of documents required for the GST registration process. The first one is PAN card and the Aadhaar card of the partners, and partnership deed if it is going to be a partnership firm, you need partnership deed and address proof of the business, and passport size photo of the particular partners or the company, and bank account statement. So who is eligible for the GST refund? So it depends on the type of GST registration and turnover of the taxpayer. Here the taxpayer with the turnover of less than 5 crore can opt to file GST return on a quarterly basis, while the taxpayer with the turnover of more than 5 lakhs have to file GST returns on a monthly basis. So now we'll move on to the unit 4. So GST rates and HSN. So HSN code stands for Harmonized System of Nomenclature. So this system has been introduced for the systematic classification of the goods all over the world. That is, HSN is a 6-digit unit form code that classifies the 5,000 plus products and services is accepted worldwide. How do I found my HSN code in GST? So now we are going to know how you are going to find out the HSN code in the GST. So log into the GST portal with valid credentials, click the services, user service, search HSN code, option note. You can search for a particular HSN code of a specific good or a services in pre-login mode on the GST portal by navigating to services, user services, search HSN code option. So what is the GST rate for a HSN code? So under GST, all the goods and services transacted in India are classified under the HSN code system or SAC code system. So goods are classified under the HSN code and services are classified under SAC code based on SSN code or SAC code. GST rates have been fixed in the 5 slabs, namely which is nil, nothing, and 5%, 12%, 18% and 28%. So how to calculate ITC in GST? So input tax credit is going to be calculated in GST. Let's business liability by claiming credential on GST paid for businesses or related purchases. Suppose a business pays rupees 15,000 GST on a purchases, rupees 20,000 GST from the rupees 15,000 as ITC, that is input tax credit. So paying only the balance rupees 10,000 to the government. So understanding the input tax, have A, B and C, which is the output of the tax on output of rupees 450. So tax paid on the purchase A rupees 100, purchase of B is rupees 120 and tax paid on purchases of C is rupees 80. So tax to be paid by manufacturer, which is 450 less on inputs, which is rupees 100, 120 and 80. So totally it is 150. Input will be 300. Eligible and ineligible input tax credit. So there is an exclusion 17 subsection 5 of the keeps some transactions and businesses out of the scope of ITC claim. So ITC cannot such items. Others are eligible for the ITC claims. Some cases of listed below. Ineligible input tax credit are. So some of the input tax credit are not eligible for the. So the first one is motor vehicle. So used for the personal purpose. Exemption for resale or commercial use or mandated cab services. Beverages, catering, health and similar services unless legally required. Membership fees, club or gym memberships and insurance, lost or destroyed goods, which is damaged or gifted items. And for the construction expenses, building, which is immovable property. And insurance, health and life insurance except for the government mandates. For the membership fees, we already know. Required for claiming the ITC, which is following. Here the invoice is issued for goods or services. Debit note issued by the supplier to the recipient, if any. So bill of entry. An invoice issued under the certain circumstances like the bill you issued instead of the tax invoice if the amount is less than rupees. In situation where the is applicable as per the GST law. Credit note issued by the input service distributor, which is ISD, as per the invoice rules. So a bill of supply issued goods or services or both. What is the rule for ITC claim in GST? So the buyer must pay towards the supply of the goods and services within 180 days from the invoice date. So if they then the ITC already claimed will be need to be paid to the government. So already paid ITC will be paid to the government. Along with the So not only the ITC is going to be paid, but it is going to be mentioned. So the ITC claim can be as again made to the supplier for the HSN code under GST. So the use of HSN code are mainly for the dealers and traders. 2 digits and 4 digits and 8 digit HSN codes depending upon the following criteria. So if the business is less than rupees 1.5 crore, no need of adapting the HSN code. Limit to claim the ITC. So time limits of the claiming ITC, that if the tax on the supply, you have to up to 12 months from the date of the supply to claim the ITC. If the supplier paid the tax on the supply, you have to up to 36 months from the date of supply to the claim of the ITC. What is the ITC claim period? So you can buy in the reporting period, which is September 1 to 22, for which you can claim ITC. The fiscal year that includes the September 2022 return ends on December 31st, 2022. You can claim the ITC on any later refund or a reporting period that ends by December 31st as filed. How to find GST rate of HSN? So log into the GST portal, same process. We are going to get into the online portal, and on the dashboard, services, registration, amendment of registration. So step 3 will be next. Click on the goods and services tab and click on the goods tab. Search of the relevant SSN codes chapter will be finalized. So what is the new rule for the HSN code? A minimum 6-digit HSN code is compulsory for the taxpayer. Aggregated turnover, so AATO, which is the short form, and of rupees 5 from the December 15, 2023 as per the latest GST. So here they are telling that taxpayer is a compulsory 6-digit code must be there for the HSN code, and if it is going to be 5 crores, it is going to be filed in the invoice system. What is the time limit? So time limits for the claiming of ITC. The time limit for the ITC claiming under GST is one of the given 2 dates, whichever is earlier. The due date to file the annual return or 30th November of the following financial year to which such invoice pertains. How to claim in? The first step is registered as taxable entity, and second is solely for business. Third, claimed on zero dated expense, and fourth one, unused ITC transferable, all GST return to be filed. Documents needed for the input tax credit, which is first one, document issued by the IES rules. So debit note issued by the bill of supply issued by the supplier, bill of entry issued by the custom department, and finally invoice provided by the supplier. So what is the rule for ITC claim in GST? The buyer must pay towards the supply of the goods and services within 180 days, that we have already seen, from the invoice date, and if they fail to that, ITC also need to be paid to the government along with the section 50. So this is already saw. So the ITC claim can be again made once payment is made to the supplier. So now we'll move on to the unit 5, which is e-way bill under GST. So e-way bill will be given for the trucks that is going from one place to another place. So e-way bill is a mechanism to ensure that goods, which is used for the logistics platform, comply with the GST. It is an effective tool to track movement and services and check the tax evasion. So the validity of the e-way bill depends upon the distance to be travelled by the. So what is e-way bill? So e-invoicing under GST, which is using the invoicing mandated by the GST law. So this is very mandatory for the trucks or system that is going to be properly used by the particular people who is going to transport the goods from one place to another place. Clear offers e-invoicing solutions for the businesses required to generate e-invoices. So criteria for e-invoicing in the annual turnover large enterprises. So what is GST e-way rules? Who should generate an e-way bill? So registered person must be generated when the movement of goods of more than rupees 50,000 in value to or from a registered person. A registered person or the transporter or carry a e-way even if the value of goods is less than rupees 50,000. What is the validity period of the e-way bill? So in case of the regular vehicle, for every 100 kilometers or parts of the movement, 1 day validity has been provided, and in case of over-dimensional cargo vehicles, for every 20 kilometers or part of the validity is provided. So and this validity expires on a mid. So what is the main purpose of the e-way bill? Why we are getting the e-way bill from the particular GST portal? So this e-invoice, that is e-way bill, is required to transport all the goods except exempted under. So if any improper goods is being transported, we can easily generate through this e-way bill. Movement of handicapped goods or goods for job work purposes under unified and specified also requires e-way bill even if the value of the consignment is less than 50,000 rupees. Who can reject the e-way bill? Here e-way bills are rejected. A taxpayer can use the e-way bills generated by other parties as suppliers on the form as GSTIN where the consignment did not reach the destination as it was cancelled on the day the recipient may reject. So GST payment due dates. So regularly 20th of the next month or every month is going to be composition the 18th of the quarter. Non-resident it is going to be next month or the every month, and input service distribution of the next month. TDS deducted 10th of the next month, and TCS which is tax collected at source which is 10th day of the next month. So how to file GST return 3B? So due dates to file GST monthly return GST are 1, 2 and 3. So August 20th GST 3B for July 2017. So this is for the previous years, and now we can 2025 and September 5th of GST 2017 which has been the provision of particular year which is 2017. So September 20th for GSTR 1 for August 2017 and October normal scheme schedule. September 20th GSTR 3B for August 2017. 10th GSTR 2 for July 2017. September 24th GSTR 2 for August 2017, which is www.simpletextindia.net. We can get through the knowledge from that. So GSTR 3B. So what do you mean by GSTR 3B? Is nothing but for monthly filers, the due date for the filing form of GSTR 3B is 20th of the every month. For quarterly filers, the due date as notified for the different states, which is UTS, or the 22nd and 24th days of the month following. How was debit note shown in the GSTR 3B? So when you record purchase voucher in the same GSTR return period of the input tax credit reversed will be visible in that return filed under the GSTR 3B. So here, what is the due date for the filing GST? So considering the same, the government implementation committee, which is GIC, has decided to extend the filing of the GSTR 3B for the month 24 for the registered persons having their principal place of businesses is set to state from 2024 to 21/11/2024. So is on debit note and credit note. To increase or decrease the supplier's GST liability, notes may be issued with the GST. Yes, the amount indicated on the supplier's invoice. An alternative to issue a debit note. If not inflated, the supplier does not issue credit notes. So buyer to seller, seller to buyer. Here the buyer to seller debit note. So where the goods are not, and credit note if the seller undercharges or buyer purchases additional goods, and here the credit note will be given. The buyer informed of the credit in with the debit note. So debit note, buyer or sent additional items. So GSTR 3B monthly. So monthly filing requirement, which is GST filed every month by all registered GST dealers as part of their compliance obligation. Simplified format, which is this form, simplified form filing process, more straightforward, reducing the company taxpayers. So how do I know if my GST, how can we predict whether the GSTR 3B is being filed? So manual view file returns through the access of the http www.gst.government. So log into the GSTR portal with a valid credential. So click on the services and you can go to the returns, view file return options and select the financial year. So by selecting the financial year, return filing period and return type from the drop down list and click the search button, the search results are displayed. GSTR 3B format. So form GSTR 3B is simplified summary return and the purpose of the return is for the taxpayers to GST liabilities for a particular tax period and discharge these liabilities. Taxpayer is required to form GSTR 3B returns for every tax period. So finally, ITC as per the section 17 subsection 5 such as services used for the person use motor car vehicles with some exemptions, certain insurance memberships, etc. So now I conclude with this. So simplified tax system GST combines multiple taxes, making filing easier and more transparent. And filing returns on time is essential to avoid the penalties and stay compliant. So GST helps improve tax compliance and business digital filing. So technology use. So GSTIN platform streamlines the reducing errors and stay updated. Regular updates on the tax rules and regulations or return formats are